We keep hearing it. Florida's housing market is starting to crack. Prices slipping, inventories up, insurance costs exploding, sellers panicking. Florida, the big pandemic boom state, is suddenly showing signs of real stress. So here's the question. If Florida crashes, what does that mean for Connecticut and the rest of the Northeast? Let's break this down, starting with what's actually happening in Florida right now. Florida was the migration winner of 2020 to 2022. People fled from the north for warmer weather, no income tax, lower home prices, and a cheaper way of life, or so they thought. But the boom has overheated and it's starting to fizzle out. So what's happening right now? Inventory has surged, in some cities approaching 6 months' supply. Price reductions now show up on half of listings. Mortgage demand is down, homes are sitting longer, job growth has slowed, and the big one that's pushing people over the edge, insurance premiums have gone nuclear. Some Florida homeowners are seeing $10,000 to $15,000 per year insurance bills for an average home. Some are just flat out getting denied based on their location. So when you combine higher costs with rising inventory and softer demand, that's the recipe for a real correction in the real estate market. Let's follow what happens when Florida cools. You might assume Connecticut and all the Northeast would cool too, right? But historically, the opposite happens. Because when a high volatility market starts failing, people and money don't stay put, they move to safer markets. And in the US, the Northeast is still considered one of the most stable. We have lower climate risk, lower insurance volatility, lower speculative buying, less extreme price swings, and less new construction. We don't boom here as hard, so we don't bust as hard either. That stability becomes very attractive when places like Florida start to wobble a little. It's called the safe haven effect. Whenever a major market softens, smart money looks for safety. During the 2022 and 2023 correction, that's the point when the mortgage rates really skyrocketed up to like 8%. There was a correction across some of the US market. And while some of those markets fell, Connecticut home prices actually went up about 7%. But why? Because limited inventory here protects prices. Our job base is stable, our market is older and slower moving, and people migrate back to the Northeast when other places become too risky. And if Florida sees deeper price declines this year, a lot of that capital will shift back to the Northeast. And Connecticut in particular benefits from that shift. So let's talk about some of the reasons why people are picking up and moving. Number one is the big one I mentioned before, the insurance exodus. This is already happening. When Florida homeowners get hit with double-digit insurance hikes, or worse, lose their insurance entirely, they start looking north. Not necessarily snowy Vermont or rural Maine, but places that feel more familiar and manageable, like Connecticut shoreline towns, coastal Rhode Island, and parts of Massachusetts. Because people that are in Florida still want those water views, and they just don't want the hurricanes, disappearing insurers, and $15,000 premiums. So that's how Florida's pain becomes Connecticut's demand. Another reason is investors are shifting north because when Florida cools, investors don't just disappear. They simply move their money. And they're increasingly choosing the Northeast for one reason: predictability. Connecticut's older homes, slower moving markets, and consistent rents attract investors who are done with volatility. We're already seeing this. There's increased investor interest in places like Bridgeport and New Haven, more multifamily demand in Waterbury and Meriden, and out-of-state buyers are chasing stable cash flow, not giant appreciation. So Florida's chaos makes Connecticut's boring, steady markets look extremely attractive. Predictable is good, especially when it comes to investing. Another reason is the relocation reversal. Remember the 2020 migration when people left the Northeast for Florida and some other Sunbelt states like Texas and Arizona? Some of them, not surprisingly, are coming back. Between the insane insurance costs, extreme heat, higher cost of living than expected, yes, that's true, crowded infrastructure, and political strife, a noticeable number of Northeast families are choosing to return. It's not a mass wave, but enough to support Connecticut's demand, even when other markets slow. And many of these returnees have equity and cash from selling in Florida, which fuels buying power here. Another reason markets cooling in Florida impacts us is that builders' slowdown in Florida is different than builder scarcity in Connecticut. Florida built aggressively during the boom of the early 2020s. Now, builders are sitting on more inventory than they expected. Many have paused or even slowed new projects. Meanwhile, up here, Connecticut simply doesn't build enough. There are many reasons why. Zoning, land costs, permitting, limited developable land. All of these keep our supply extremely tight. So while Florida might spend 2025 dealing with extra home availability, Connecticut will continue to experience low inventory, consistent demand, and slow and steady price pressure. A Florida slowdown doesn't magically create houses in Connecticut. In fact, it actually highlights how undersupplied we are. But that undersupply keeps prices up and demand high here. Another reason is what's known as the trade down buyers, returning to the north. So if those Florida prices fall significantly, some owners will sell that second home or investment property there and use that money to trade down back into the Northeast, because our prices are usually higher and you get less. This will likely be people that have adult children they want to be near, or aging parents, someone that needs medical care, they want to be near their grandkids, or they want a more stable school system. And where do they buy? Not New York City, not Boston, but Connecticut. Because it's just more affordable and more spacious and more practical landing spot than those other cities. Now that we know why Florida will impact us, here's what a Florida downturn actually does to Connecticut. It strengthens local demand. It pulls investors back to stable areas. It sends frustrated Floridians north. It highlights Connecticut's limited supply. It keeps our prices firm, even if they just flatten. And it reinforces Connecticut as a safe and stable market in a volatile economy. But a Florida crash dragging Connecticut down? Absolutely not. If anything, it just helps us. Connecticut is the tortoise in the race, and the tortoise doesn't crash, the tortoise wins. So while the headlines scream about Florida's housing downturn and meltdown, remember, real estate is local. Florida's problems don't become ours. In fact, they may push more money, more people, and more stability into the Northeast, especially in Connecticut. Drop a comment if you agree or disagree with what I've just said. Have you left Florida for the Northeast or vice versa? What do you think? If you found this video helpful, please subscribe because you don't want to miss any of my weekly Connecticut content. And as always, thanks for watching and have a great day.